The TV told us to win with no thought of losing. Then I woke up. Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to talk about the Australian dollar here. We have it up with the euro, largely because the two of them have reset within the evolution of the trade. For more about the evolution of the trade, click this link here and learn more about the four phases. Right now, we're in the alignment and energy phase, and this is a reset. Resets are a realignment, in this case, triple down, a realignment of the daily, weekly, and monthly down. And the way the computer describes it is a triple down arrow. It's an early cycle. It's an early cycle because the composite score, which is here, that's the X bar, is minus 5.2. Anything really below zero is an early cycle, and this one's showing high compression. That's what the down arrow COM means. So this one's really set up to move. And it's a bit different than the euro. I just did a euro review. I suggest going to watch that one as well. But right now we're going to talk about the Australian dollar. If we slide over here, we can see the seasonalities. The dollar generally, or the Australian dollar generally does well in the springtime or in the winter time up into the springtime, and then it has more of the weakness in the warmer months. I'm not sure that one's going to apply this time around. We're going to talk about why. The energy build is relatively bullish, 56 and 65. 65 is quite high. But again, we're going to talk about why that doesn't matter as much. The same thing applies when we talked about the euro. The Australian dollar has been down for 6 months, and it's only generated 2% return. This one breaks the ice and has some of the technical triggers that we were talking about. With the euro takes place, the sell-off could get, this one's a bit more volatile in terms of, say, the Japanese yen, the euro, and the dollar index, which is also in here. It's a commodity-related currency, and it's if it turns down, and the fact that it's turning down doesn't bode very well for the global economy. And again, I don't think that's something we can talk about right now. Everyone's so convinced that everything's back to normal, pandemic's over. The virus is, it's part of the conversation, but I've long stated before it shows up, I'm more worried about what's going to come afterwards than any virus that's taking place with this. The global situation, the economy, the sovereign debt crisis, if you want to call it, or the debt crisis around the world hasn't gone away. It's been building up. We've been talking about for at least 10 years. It's going to play out here towards the middle of the decade, and it should be over by the end of the decade. It's going to have a great effect on the currency exchange markets that are taking place, and we're probably going to have it reorganized. The world's going to be reorganized with a new currency and a new setup, and I doubt the West is going to like what takes place. If we click here within the tabs, I pull up the FXAs with the computer tracks for the Australian dollar. It's in a rising upward consolidation, but now it's breaking down. In terms of the euro, we were talking about looking for a technical TA trigger. I think we've got more of one for the Australian dollar. We're starting to break that uptrend line. It's a rising, whatever you want to call these, flags, pennants, anything. If you get a decisive blow, and I think what's going to happen is we're going to have to take out this swing low, falling below anything that we draw in terms of line doesn't really generally do it. I think it's going to be below this low. It's really going to pile on the selling. But I think we're further along than the euro. So I think we're right on the cusp of a TA trigger, which will spark additional selling, even though the computer recognizes here that we are in triple down already. So this is not a particularly great setup for the bulls. We can see where we're at. It's not as dangerous as the euro in terms of the reversals. We're stuck in here. Everything that's above it is painted red. Everything below it, which is support, is painted green. And if we zoom out from some of this, so we can see, let's take it to at least 100. So you can see price is currently 71. There's a whole bunch of zones here, but I think if we lose and fall into a 68 handle, really lose that 69, 68.95, we're going to fall below this lowest one. We'll see if the computer then draws any reversals in this zone, but we could easily hit an air pocket until we find some type of reversal down below here. And this is the 2020 low right in this area. So if you hit an air pocket, it could be a relatively quick fall down to that low. And it is something that You have to probably keep in mind, because if this short-term consolidation is over and you get a technical trigger where the public, which focuses mostly on short-term charts, starts to sell and gets panicky, this is already set up in a triple downside alignment. And if we take out any of these reversals, it will just only accelerate. Just like the euro, everyone says, well, the energy is build strong, 56, 65. Why is this not railing? Again, the same conversation we had about the euro. Bullish energy builds tend to take place, and then price slides through them. That's how the foreign exchange markets work. It's probably because of the result of too many hands in the cookie jar and central bankers trying to control perceptions and outcomes, and then they get smoked because the invisible hand just rolls them over. It's just an endless supply of which then to short into, and then the price falls, and the central bankers have to take the crippling losses. If central bankers were public companies, they would be out, or private businesses, public companies, they'd be out of business. They're backstopped, so that allows them to have ongoing failures that would crush them in the private sector. But eventually, this setup is no different than the past, where you have a high point and you're going to head to a low point, and ultimately, what you're going to do is you're going to end up sliding through and creating a new low. So the question is does this low hold? But we'll address that once this breaks the ice definitively. I think it does that when it takes out 69, 68.95 definitively. In terms of the Pro Index, we have the same problem. Within the euro, we have professional selling. It's been ongoing. In the euro, it's already kind of broken below the lows. I think what we're watching, you can watch the Pro Index, and you can follow the Pro Index here in the Pro Charts column. It provides a different perspective than energy. Click this chart link right there, and you're going to get a chart that's similar to this and the exact same copy of this one. We're going to head back down. Whether or not the Pro Index takes out the swing low before price, that remains to be seen. I suspect it will. It'll create another shorter term bearish divergence, which will generate more selling. So really the setup for the Australian dollar is very similar to the euro. It's probably not waiting so much on a technical trigger. It has a little bit earlier cycle, lower number here. So there's more room in the cycles, and it's showing high compression. So this one's really revved up to go. And if I was bullish, I'd be extremely nervous. So that's it's really how you want to set this stuff up. The reset, I mean, we've already been in the short position, core short position for 6 months. It hasn't been super profitable, but it could pick up as if this thing starts to break down. Remember, resets are only minor escalations or reductions or modifications of the core position. In these cases, these two assets, the core position has been down. If you have any questions about the euro, well, euro and the Australian dollar, we're talking about the Australian dollar this time around, let us know. There's probably not much more to talk about. There's a lot of cohesion within the Forex. It's basically up the dollar and down everything else. I've been warning everything that it's setting up like that, but yet everyone's still talking about being bearish. The U.S. dollar, which is I can't fathom it, honestly. It's just we follow the trends and we listen to the invisible hand, and it's telling us one thing, and it's highly organized. If you forget, you can come back down here and you can take a look at Forex, and you're going to eventually see that markets are either highly organized to the upside and downside. We're not quite there yet. It's working its way into that. When it does, I don't know how you can maintain the bullish the dollar and bearish, or bearish the dollar and bullish all the other currencies. Perhaps there's something else that the invisible hand sees, and I'm pretty sure that's the evolving debt crisis that's taking place. If you have any questions, let us know. If not, keep an eye on the Australian dollar, and enjoy the rest of your weekend.